Hey everyone, welcome back to my channel. Sorry for the absence. I was traveling. I was in the trading conference in Miami. Currently, I am in San Diego and I'm filming from the hotel basically. So today I'm excited to talk about HIMS and HERS Health, ticker HIMS. I've just started buying shares because I see a huge long-term potential despite a recent dip, and I'll break down exactly why I am buying it. So, short overview, HIMS and HERS is a leading telehealth platform. They are providing different drugs like personalized treatment, sexual health, weight loss, dermatology, mental health, and so on and so on. And the greatest thing is that you can buy these drugs affordably without any insurance in the United States. And they're expanding to the Europe, Canada, and so on and so on. First of all, it focuses on convenience, privacy, and high margin recurring revenue, over 90% of sales, driving explosive growth from 111% yearly to 49% in quarter three only. Yeah, so with the 2025 revenue hitting around $2 and $3 billion. So as you see, the stock price, max price was about 73, and it fell up to 26.85. It's over 63% plunge. So that's why I'm really interested in this company, because with this growth, it has a huge potential, in my opinion. Basically, I think that market was scared of competition, and also that the company was excluded from Novo Nordisk partnership. But I don't believe it will be an issue. They are adapting very fast, and they also are innovating all the time. The service is great, and it's only improving. They are personalizing all the drugs. They are asking multiple questions. They are trying to improve the service, and I see a huge potential here, as mentioned already. So let's dive into financials, my favorite thing. And we see that total revenue was growing annually really fast, like 82%, 93, 65, 69. They're slowing down a bit, but it's just because they're getting bigger and the market share is bigger as well. But just remember that they will be expanding to Europe massively as well. And now the presence in Europe is still not really big. And if we will take a look into the net income, we see that they became profitable, but on quarterly, we see that the profit fell a bit, like minus 79%, but it's only because they are like increasing expenses. We see that the expenses were lower and they increased like about 30 million, 31 million. So I don't think this is a bad thing. They are investing into the company, they're improving the service, and so on and so on. Definitely what I don't like, but for the growth company, it's normal, is that diluted shares outstanding are growing. Yeah, I like when they are making buybacks, and this year actually they have started to do so. Yeah, hopefully they will continue to do that as well. If we'll dive into the balance sheet, we see that the total assets are much higher than total liabilities. This thing which I love, but what I don't like, that liabilities are growing faster for now, but it's just because they're investing into the company. And later, I believe it should slow down as well. Let us take a look into the current assets, and current assets are lower than total liabilities, but they are definitely higher than the current liabilities. So it's still okay, but I would love to see that current assets would be higher. Not yet, probably, because with that growth, they need to invest in the company so much. Also, if we will take a look into the cash flow, free cash flow, annually, we see that they became positive last year, and the growth is over 300%. This is really great. On the quarterly, they are like standing still. Last quarter, it was lower, negative, but yearly overall, they are still really positive. I love that a lot. So if we will dive into valuation, PE is 50. It's really high for the slow growth company, but for the company which is growing over 60%, it's not so high overall. Forward PE is 46. That means that still the analytics are probably seeing some growth here. And price to sales here is what is really important for me. And as you see, it's 279 for the company with this growth. It's really not high. It's pretty cheap in my opinion. Price to free cash flow is 53, but just remember they just became free cash flow positive, so it's still fine. Overall, these numbers looks really high if it would be a company which grows like 20% or 15%, but we see about 60%. So I don't really care about these really high numbers in this situation. Of course, this company is much higher risk than, for example, Microsoft or Facebook, but still, it's a new company. I believe in their growth. I like the products. Overall, we can see that these numbers looks really high. Yeah, and the company looks really expensive. But remember, the growth is not 20%. It's about 60%. And even if they will slow down a little bit, it doesn't matter. I don't believe they will slow down, actually, because the service is getting better. I love the products as well. I use some stuff for the hair, and because I'm like little bit balding and so on, but it's still fine, I think. Yeah, if we'll take a look into the gross margin, is 65%. It's really high. It's not a software company. Of course, they have some software, they have an app, but it is not like a main trigger here. First of all, they're earning money from the products. Yeah, operating margin is 6, profit margin is 6 as well. It's not really high, but in future it can improve, and they are planning to improve. So analyst estimation for the growth next year is 24, but I don't believe that it will drop down so much. It should be at least 40 in my opinion, and with the improvements in their products and their services, I don't believe that it will drop so much in the next few years at least. Like EPS next 5 years, it's about 12. It's also, for me, looks a little bit ridiculous. I understand that there is a competition there and so on, but there's so much forward from other players that I don't believe that it will be 12 in the next 5 years. I believe it can be about 20. So I can be a little bit too positive maybe, but I am not so, like, I don't believe that it can be so negative like as they are showing here now. So let's take a look into the risks and positives, pros and cons here. So the main risks, especially from the analysts, is that the growth will slow down to 17-18% in 2026, which I don't really believe, and I hope it will not happen. So we will see. And the second risk is regulation, like GLP-1 curbs. They cannot pass something in regulations. There is a fierce competition there, but the verticals in the HIMS is much larger than only GLP-1, yes, so I believe they will be still good in the other areas. Even if they fail here, they still will be able to be competitive in the other areas as well. So this is kind of high risk, but not the tragic risk in my opinion. And the last risk is basically competition, like the weight loss rivals. There are multiple players on the market, but still the service here in HIMS is probably the best one in my opinion. So I really see that they will still be dominating on the market. Yeah. So if we will take a look into the positives, like the pros, we see that there is a 70% potential of growth here in CAGR. So this is really positive part. They also are providing new verticals, new approaches, how they will be serving the client, like peptides and so on, like new drugs, and like they try to develop their market very well. The next positive is the compliant expansion, like, for example, they are developing peptides products, and they also are trying to personalize everything as much as possible. So the labs here are really good thing in my opinion. And the last positive is that they are first mover in the telehealth mode. Had other telehealth companies, but totally in the different niche. And HIMS is definitely like the first mover here, and they are known better than other competitors. So I believe they will still keep this domination on the market. If we will take a look into the price targets from the analysts, we see that the lowest price is 25. And that's why I'm starting to buy it only now, because I was thinking that the lowest price is 30, maybe it can go lower, and I hope that it will go lower because I'm trying to accumulate the position here. But the average is 45 and the high is 85. Yeah, so my price is about 60 and average is 45. Even with 45, I will be really happy because it's about 100% growth. Yeah. And if we'll take a look to the analyst recommendation trend, we see that before strong sell was much bigger chunk of it here. Now it's reduced massively and the hold increased. So we just can see that the sentiment is changing to the positive for the HIMS. It's still not the best one here, but as we know, analysts are wrong very often, yeah. And if they wouldn't be wrong, I probably wouldn't earn any money in the investing. But so as we see, the sentiment changes to the better side, and I believe they are underestimating this company a lot as well. So why I'm buying? First of all, I see that the sentiment is too pessimistic. I started to buy at low 30s and I will be accumulating the position further. In my opinion, I see that the stock will have a full reset. The HIMS company is becoming a full health ecosystem in my opinion. They're beating the estimates most of the time. And I plan to add on the dips. Yeah, I'm accumulating the position. I will be increasing it. Of course, it will not be the biggest chunk of my portfolio like Facebook or Amazon, but because the company is just too risky in some areas. Yeah, but overall, I am ready to have like 5% of my portfolio in this company, and I believe in this company a lot. So yeah, this is my full thesis on HIMS, and I'm interested in your opinion. What do you think about this company? Is it a buy, hold, or sell? Also, just want to mention that I'm traveling now and the lighting probably will be not so great, but I will try to adjust and make more videos. Yeah, sorry that I was abandoning you, but yeah, just remember, keep growing.